Hi, my name is Julian Kumar from Market Update Premium. We are trading growth and momentum stocks. Today I want to do a portfolio review with you, but not only about the winning trades, but I want to also show you some losing trades. I'm always very transparent with my members and we go through my winning and through my losing trades every week in the weekend review. Because I think it's very important not only to learn from the winning trades, but also from the losing trades. But let's start with the winning trades. So we have a very strong market at the moment. So we can also have a quick look here at the market trend model that I'm using and that also my members are using. And you can see that we increased exposure here when the market came out of the sideways market and started to rally again. But I mean, we have a 103 days uptrend now in the Nasdaq Composite. So time-wise, the market is very extended. But you don't want to call a top. This is important. You want to follow the trend. You want to be able to keep a maximum exposure and be maximum invested as long as the trend is up and you don't have any signs for a correction or any signs that the trend will reverse. So, and let's have a look at my own portfolio, what I bought in the last couple of weeks, and especially, what I held in the last couple of weeks. So one of them is gold here, for example. So I bought into gold here when gold was breaking out of this wonderful pattern here, this wonderful volatility contraction pattern. A volatility contraction pattern is a pattern where the volatility inside the base decreases over time and get tighter and tighter and tighter. And that was happening here. And then here gold started to break out, and many members and myself, we bought into that. But when I trade gold, I trade a very big position size because otherwise you're not able to benefit from that. This thing trades on an average daily range of 1.3%. So this is a very, very low ADR and it's a very slow moving market. That's why I buy a 100% gold position. So that means I put 100% of my capital into gold when it started to break out. The risk is not very high in that case because my stop loss, I started to buy here, around here. My stop loss was 1%. So in worst case, I would lose maybe 1% of my trading capital, which is not very big. And gold made a very nice move. You could see that here. It moved up 10%. So that means I have a return on my capital of 10%, which is very good. It's a 1 to 10 risk reward ratio in this trade. I already took some profits here off the table around this level so that I can also secure some profits. Yeah, and sometimes I'm trading commodities. I also traded coffee in the last couple of weeks. I can show you that very quickly. I traded coffee, but it did not work out. So I bought here into coffee via a triple leveraged ETF. So it made a very nice move of 6%. I sold some into the strength and then boom, it reversed and I got stopped out break even. So sometimes you get also good opportunities in other markets like, for example, gold, silver, coffee, oil, whatever. I'm always keeping an eye on that. So then next position that I'm owning right now is Bitmine, so BMNR. It's a crypto treasury company, but also crypto miner. And it's the best, or the stock that held up the best, to be honest. I bought a little bit late into that. So I bought here into the stock and I placed a 10% stop loss on this thing. So it was around here, was my stop loss, a little bit far away, to be honest. I like to put in tighter stop losses. But, I saw the potential here in this stock. It made a big move here. It made a big move here. And some of the members traded that here. So this wonderful up move. And then it broke out of this small pattern here and followed through nicely. So you can't see that here correctly, but look at the sales here. Right, this is one of the stock selection criteria I'm using, EPS and sales, and look at the sales growth here in the last couple of quarters. And I think also the future sales that are not visible here are looking good as well. So this is an Ethereum related crypto treasury company. And one of the things what I found interesting about the stock is that the ARK fund invested 180 million in this fund. In this crypto treasury stock. So every time when the ARK is moving higher, BMNR will also move higher because the ARK will put more money into that. And you can see that here. I mean, this thing is extremely liquid. So, and from the buy point, it was up 30%. I already took some profits here on the way up, and then boom, yesterday it came down together with a down move in cryptocurrencies. But I keep the stock. Why I'm keeping the stock? Well, very easy. First of all, I have a break-even stop in it. So you can see that here with the orange line. Every time when I have an orange line, that's a break-even stop. So that means if I get stopped out of the position, it's break-even, without profit or without loss. But in this stock, I already took some profits into the strength. So I'm already benefiting from the trade. It's profitable. So, but it's above the purple line here. It is above the EMA 8. This is one of my trading stop concepts. And the other one is EMA 21. This is the green line here. But in that case, it's above the EMA 8. If this thing now pulls back a little bit more, I will probably close the position. But at the moment, I don't see any reason. It's down 10%, yeah. But, I'm following my rules. That's it. And it's still above the EMA 8. So GPro, very nice position. I bought that here. It's more a story stock, to be honest. So it made a big move here. You can see that 220%. It made a big move here, 60%. Then it pulled back, got very tight, built this range here, and then it broke out. And I started to buy into the stock. And now you can see it's up 77% from the buy point. I took multiple times profits here into the strength. It's of course a break-even position, and I will follow that here with a purple line with the EMA 8. Interesting story in the background. I mean, GPro is a big, it's not a big company, but they have a very, very wide followership. So a lot of people like their products, use their products, and here they announced that they will offer their video content for AI training purposes. And this is really, really interesting. We saw a similar story with Reddit in the past. And that is a new catalyst for a stock like GPro. And that's also one of the reasons why I got interested in that. And some of the members are owning it as well. So then Wolf, I bought the first time into Wolf here on this gap up. I sold it here when it was below the EMA 8 and I bought that back. This is something I'm doing over and over again. I follow my rules, I get stopped out, or I sell the position, and a couple of days later I buy it back. So I started to buy here when it broke out. I bought more on the way up, so that's why my average entry price is a little bit higher. It's already a position that is break even, and I'm up 18%, so around 18% or 17% in the stock at the moment. Not the best momentum here, but I will keep that as long as it is above the EMA 8. Then Air, semiconductor stock. I bought that here when it was breaking out of this pattern here. It was not the most tight pattern, to be honest. So it was a little bit a wide bar here. And I'll place my stop loss inside inside the pattern, so around 6% away. I luckily did not get stopped out here. I think it was just a question of 1 or 2 cents. And then it continued to move higher. I took some profits here, and now I'm following it with the EMA 8. And one of the things which I'm teaching all the time also to my members is how to set stop losses correctly and also tight. And on the other side, how to buy into a position correctly. Because, I'm not buying all my shares at once here. I'm buying when the stock is breaking out, and then I'm buying 2%, if it is a fast moving stock, 2% higher more, and then another 2% higher more. And you will see that in the stocks that I closed here in the last couple of days, that it helps me a lot to protect my capital, to buy into a stock in multiple parts, because it reduces the risk. All the stocks which only have failed breakouts on the upside, and I'm trading 90% breakouts, they will have very small losses. But some of these winners, they pay for everything. I mean, This one here is already 20% in profit right now. So then NB, I bought that here. Similar pattern to the other stocks, you know, consolidation, VCP pattern here. Then it broke out. I started to buy. I took some profits here into the strength, and now it's up 28%. It was already up here 37% in the peak, and now I let this thing run above the EMA 8. So PL, that was a late gap entry pattern. We had this gap up here. I bought not into the stock on that day. Some of my members did that, and it was the right decision. But on that day, I think it moved so fast that I was not willing to put in the larger stop loss in PL. Satellite stock, so it's a high potential sector, growing very fast. I mean, you can see that here, right? 20% revenue, that's okay, that's not big. But 245% backlog growth, record revenue, and substantial growth in our backlog. You know, that's what you want to hear. You want to hear that the products and services of the company are in a high demand, right? That gives you potential. I'm always looking for stocks that can make moves of 50 to 100% in a couple of weeks. Otherwise, I will not touch the stock. And you can see that here, broke out after two days of consolidation. It broke out. I bought into that. And now it's up 13%. I sold a little bit here into the strength. And when I say a little bit, then it's mostly 10% of my holdings. So when I'm usually trading a position size of 10% and it has 10% profits, it's growing to 11%. And then I'm reducing the position back to 10% by taking some profits off the table. So Sound, that was not easy to buy into the stock. I bought the first time here. I got stopped out, I think on the same day. Yeah, on the same day here. And then I bought back on the next day when it started to break out again. And you can see here is my average entry price. The position is already protected, break even, and I'm in profit 16%. So I did not sell anything into the strength here because it was not up 10% or more for one day. So when it gets very extended, then I will sell a little bit into the strength. So then a bigger winner is Veritone. We were following the stock here for quite some time. It's also not a stock which is easy to discover, to be honest, because you can see the sales growth is negative, EPS growth is not very outstanding. But when you do some research about the company, you will quickly find out that they are making money in AI software and AI services. And you can see that here. They had published earnings at the top end of the updated guidance, and their core AI software department grew by 45% in the last quarter. So, and then we had this big breakout here. I did not buy into that. It was moving very fast, and I was a little bit hesitant on the stock. Then they had a secondary offering, and then you can see it got tight here, and that was the signal for me to buy into the stock. It broke out here. I bought a first position, and now this thing is up here 38% in just a couple of days. It was up here almost 50% in a couple of days. That's what I'm looking for, right? And I sold multiple times now into the strength to already take some profits off the table. So then I'm owning NBIS. It also is a late gap entry. It gapped higher here. I was not very convinced about the gap up here because you can see that the stock always made these big moves here on the upside and then went nowhere for quite some time. And then they had these big news here. But I thought, okay, it will probably consolidate for a couple of days. And it did it and broke out here. I bought a position. A lot of members bought a position in the stock. I could also protect that now with a break-even stop. And now it's up 13% from the buy point. So then I bought into Joby, which is a different trade. But we already traded Joby successful here on the way up. So it was a very big move. So in peak, it was up 120%. I took many times profit into the strength, and then I sold that here when it was breaking down below the EMA 8. And now you can see it consolidated nicely here, built a small bottom, built a very tight consolidation, and then broke out here on the upside. It's an air taxi stock, so a very interesting high potential theme. And yeah, it broke out here 13% on one day. I already took some profits here off the table. And let's see what will happen here in the next couple of days. So then QS, we also bought back into this leader. We traded this up move here already with 110% from the buy point. And I think I sold my last position here, or the last part of my position, when it was very clear below the EMA 8. And then you can see they had a positive news, gapped higher, but the news was not very convincing, so it was not game changing. That is the reason why the thing pulled back here. Then it moved higher. I got more conviction in the stock because I saw that there is a lot of demand. And then it got tight here, and then boom, it broke out, and I bought into the stock. Around here, I placed a stop loss of 6%, so below this breakout line, so tight stop loss, that's always important. And yeah, now it's up 22% in just a couple of days. I sold already a little bit into the trends to take profits. We are trading battery stocks at the moment in the community, and some of the members, I can show you that, some of the members, I'm very proud always on my members if they take trades that I did not take. So a few of the members were able to trade this one here with a 60% up move, a battery stock. I traded this up move here in the past. I also bought into the stock here a little bit late, and then I got the feedback from the market that it was too late, and then I got stopped out. But members were able to buy earlier here into the stock and yeah, and trade it all the way up here. So, but then I bought here SLDP, another battery stock. Big up move here, consolidation, VCP pattern, so volatility contraction pattern here. Got very tight in the last couple of days and then broke out, and I bought a first position here. Then yesterday we bought into Oracle, late gap entry. It was on the buy list for members yesterday. This is also not a stock that makes a big rally when it gaps up 30 or 40%. So I waited here for the consolidation, and then yesterday we bought into the stock. And because it's not moving so fast, the ADR is only 4, I would like to see 5 or more. I bought also a larger position here in the stock. And then I bought back CoreWeave yesterday. The first time I bought here into the stock, and then I got stopped out yesterday, and then it reversed very quickly and I bought that back. And now you maybe ask yourself, yeah, why is he trading so actively, and why is he trading in and out of stock so quickly? It's very simple. I mean, look at the first buy here of CoreWeave. So it was a stop loss of around 3.5% here. I placed a stop loss 3.5%. So, and my position was not a full position in that case, because I buy into a stock multiple times. So that was just a half position on. And when you have a stop loss of 3.5%, I lose, in that case, I lose around 0.2% of my capital with that trade. So it's very cheap to test out if this thing works or not. And I can easily buy back on the next day if it moves higher. So these tactics that I teach over and over again, they help you to protect capital. And we had some other big winners in the community that I missed, and I'm really proud of my members that they, for example, bought here into IonQ, which we discussed so many times in the past in the community, or Oklo, for example, which made also a big move here on the upside. But it's not that important, right? If you have a great market situation, you will find so many stocks to benefit from. And even if I made so many mistakes, and even if I missed so many stocks now in September, I'm still up 35% in September with my trades alone. And I did a lot of mistakes, and don't get the wrong impression, 60 to 70% of all my trades are losers. And as long as I keep them small, and this is what I'm teaching over and over and over again, I can benefit from just a couple of big winners in the market and have a great result. So keep that in your mind. And now I will quickly navigate you through a couple of stocks that I closed. RCAT. So I bought a little bit late into the stock. So I bought that here on the breakout, but it was a little bit late to be honest. I placed a tight stop loss in this thing. I'm not really sure about this, where I placed my stop loss, but it was a little bit tighter. And then on the next day, they had a secondary offering and I got stopped out on this thing. around 10% below my buy point. Of course, bigger losses are also part of the game. But in that case, again, I only had a half position on. 5% of my trading capital was in RCAT and it went down 10%. So I was just losing 0.5% of my overall trading capital. So it is a very cheap thing, right? And now it moved higher, but I did not buy back into that. This is not a setup that I'm trading, and now I'm waiting if this thing will get tighter, and then I will maybe buy back into that. So then AQST, they had a big gap up here on positive news from a competitor. I bought into the gap up here. I don't want to go too deep into the details in this video how to trade a gap up like that, but I bought into that. I got stopped out on the same day. Yeah, something like that happens. It's a losing trade, but I did not lost much of my trading capital. So then I bought into MP on that day. It was also a little bit late here. I bought above this high here on that day. I bought into that. And then I put in a 3% stop loss, so a very tight stop loss, and I got stopped out here. But it was not a full position, so it was a very, very small loss on my trading capital. And then on the next day here, it moved higher, 8%, but I did not buy back into that. Is it now a mistake or not? It was not really the setup that I'm trading. And I was already a little bit late, so I decided not to buy into that. And that's totally fine, right? You don't have to catch every trade. If you always think that a trade like MP is the special trade, right? The trade which brings you the biggest profit or whatever, you are on the wrong path. I just repeat setups over and over and over again. And the next setup will wait. We have 2 setups today on the list that are tradable, and every day we have trading opportunities in a good market. So I just have to wait for the next setup. That's it. And I will not chase a stock like MP. So then GPRE was a losing trade. I bought into this year when it broke out. I bought 1 day later, sorry. I bought here above this high. I placed a tight stop loss, something like 4%. On the stock, it reversed on the same day and stopped me out. Was probably not the best trade in hindsight, but these biofuel stocks, they have big estimates, and the sister stock GEVO, which one of my members traded here, made a big move. So GPRE was interesting to see if the stock can move higher after it found a small bottom and support here around the $10 level, but it did not work out. You can see that. So then CLS, which is showing a very good setup here already. I bought that. Let me quickly redraw that here. I bought that on this day here on a breakout. It was looking very good. It was a 4-star setup here. It broke out and then boom, on the next day it reversed. So I bought here around this level. I put in very tight stop loss of 2.5% on this thing. And then I got stopped out, and then you can see what looks like a triangle pattern turned into a sideways consolidation. This is something which is always happening in the market. Patterns morph. That's also something I'm teaching over and over in my video course, so that you understand what looks like a triangle can easily turn into a sideways consolidation or into another pattern, because every time when traders are trading the stock, new price information will be available, and then also the pattern can change quickly. So that was a very small loss. Then DFDV, I traded that. Also probably not the best trade in hindsight, because the stock was not in a very clear momentum mode. I bought into the stock here on that day. So I tried to buy also earlier into the stock, but then I got stopped out. And then I bought into this into the stock here, and then it went sideways for a couple of days, and then I got stopped out here on Friday. And now you can see it's moving lower. That's the reason why I'm using stop losses. I always want to make sure that my capital is protected against big losses. So in BTCS, it's another crypto treasury stock. It was overall a great pattern, especially in the weekly chart. You can see that here in the weekly chart, big move, nice consolidation, big VCP pattern. And then, I tried to break out. I bought into the stock here, and then you can see it went sideways, and then boom, I get stopped out. Not break even here, but with a very small loss. I moved my stop loss already a little bit higher so that my risk is reduced in that case, and then I got stopped out of that. So in GCT was another stock. It went sideways here around the EMA 8, made a big move before, and then it looked like it will gain momentum again. So, and then it broke out here very nicely, and then boom, 2 days later I got stopped out. So I started to buy here. My average entry price is a little bit higher, but I started to buy here, so I had an initial risk of around 3.5% in GCT, and then I got stopped out. And yeah, now it's moving higher, but I will probably not buy that back. So you can see, all these losses have something in common. They are very small. They are happening very fast. So, and maybe sometimes members ask me and say, yeah, Julian, why do you give the stocks not more room? Because sometimes they are reversing after that. I can tell you from my own statistics that all the big winners, they work immediately after I bought them. It's not that I'm sitting there and waiting days or weeks until the stock is moving higher. No, I buy a stock and it shows me very quickly on the same day or maybe in the next 2 days if it will be a winner or not. So, and this is also the reason why I'm using tighter stop losses these days as years ago, because, I'm not willing to hold on to losers anymore, and I'm also not willing to give a stock a lot of room. I want to protect my capital, and I want to have stocks that make big moves and, return multiple times my initial risk back into my account. So high risk reward ratios. That is very important for me as a trader. All right, I hope that this video helped you to understand a little bit, okay, why I'm buying stuff, why I'm holding stuff, and how I'm doing that, and how I also manage my losing trades. And again, don't get a wrong impression here. I have a hit rate between 30 and 40%. So the most of my trades are losers, but my job is to keep them very, very small. This is important, and let my winners run. And this is how I make money, and this is my edge in the stock market. So, and I hope that this video helped you. You can try out the member community Market Update Premium 14 days for free. So join and also get your own impression about the community. Join, 275 other traders from different areas of the world, and also, get in exchange with them in the live chat, and also, learn from me, and also maybe get some inspiration with some patterns. So thank you very much for watching this video.